There are 4 words you can say at a car dealership that will wipe the smile right off the finance manager's face. 4 words. And the second they hear them, the most profitable room in that building just got quiet. Those 4 words are, I'm using my bank. That's it. Simple, quiet, powerful. But here's the part most people miss. Those 4 words only work when your credit is strong enough for your bank to actually back you up. Because if your own bank says no, if your credit union says no, if your report is full of collections, charge-offs, late payments, repos, and hard inquiries, then you walk into the dealership with no leverage. And when you walk in with no leverage, the finance office controls the game. So today, I'm going to show you why those 4 words matter, how dealership financing really works, how they make money inside the finance office, why your own bank can protect you, and why fixing your credit before you ever step on the lot can be the difference between a clean approval and a financial trap. Because most people think the dealership makes all the money selling the car. They don't. A lot of the money is made after you already agreed to buy the car. In the finance office, that little room where they smile and say, "Good news, we got you approved." That sentence sounds helpful, but sometimes that is where the trap begins. Here's how it works. When you finance a car through the dealership, most people think the dealer is shopping around to get them the best rate, and sometimes they might get you a decent offer. But you need to understand the machine. The lender gives the dealer a rate. That rate is called the buy rate. Let's say the bank approves you at 6%. The dealership can turn around and offer you 8%. That extra 2%, that can be profit. And you may never see it listed as a separate fee. It just hides inside the loan, inside the payment, inside the good news. And over 60 months, 72 months, or 84 months, that small difference can cost you thousands. This is why focusing only on the monthly payment is dangerous, because a payment can be manipulated, the term can be stretched, the rate can be marked up, the add-ons can be rolled in, the warranty can be added, the gap can be overpriced, the paint protection can appear, and suddenly the payment works, but the loan is terrible. Now listen, if you already financed a car at a dealership and you feel like you got played, don't beat yourself up. Most people were never taught this. They were never told there was a buy rate. They were never told the dealer might have room to mark up the financing. They were never told to walk in with their own approval. They were just told, "Good news, you're approved." And when your credit is bad, those words hit different. Because when you have been getting denied, when your score is low, when collections are sitting on your report, when charge-offs are still showing, when hard inquiries are stacked up, when you finally hear approved, it feels like a blessing. But sometimes a bad approval is worse than a denial, because a denial stops you from signing. A bad approval gives you the keys and lets the damage happen every month. That is why you need to understand this before you go to the dealership, before they run your credit, before they talk payment, before they send your application to 10 lenders, before you sit in that finance office tired, hungry, and ready to go home. You need to say, "I'm using my bank." But to say that with confidence, you need to do the work before the dealership. Go to your bank, go to your credit union, get pre-approved for the auto loan first. Know your rate, know your term, know your maximum amount, know what payment actually makes sense. Now the dealership cannot make the whole conversation about payment. They cannot hide behind a 72-month term. They cannot make the rate disappear inside the monthly number. They have to compete against a real offer. Your bank becomes the floor. Your bank becomes the protection. Your bank becomes the number they have to beat. And now the conversation changes. You are no longer asking, "Can I get approved?" You are asking, "Can you beat this?" That is a completely different position. But again, this only works if your credit profile is ready. Because if you go to your bank and they deny you, or they offer you a high rate, Or they say your score is too low, or they say the negative accounts are too recent. That is not the moment to run to the dealership and hope they save you. That is the moment to fix the credit file, because the dealership can only work with the report you bring them. If the report says 5 at 20 score, if the report says collections, if the report says charge-offs, if the report says recent late payments, if the report says too many hard inquiries, if the report says high utilization, then the bank sees risk. And risk gets expensive. Risk gets high APR. Risk gets more money down. Risk gets low approval amounts. Risk gets cosigners. Risk gets we can help you, but only on this car. Risk gets trapped. So before you go shopping, pull your credit report. Experian, TransUnion, Equifax, look at what is actually hurting you. Are there collections reporting? Are there charge-offs reporting wrong balances? Are there late payments that are inaccurate? Are there hard inquiries you did not authorize? Are there duplicate accounts? Are there old addresses connected to negative accounts? Are your credit cards maxed out? Because if those items are inaccurate, outdated, duplicated, unverifiable, or unauthorized, they may be challenged. And if your utilization is high, you need to bring it down before applying. This is how you prepare for the dealership, not by memorizing tricks, by walking in with a stronger file. Now let's talk about what happens when you bring your own financing. The dealer might say, let us try to beat your rate. That is not automatically bad. Sometimes they can beat it. Sometimes manufacturer financing is strong. Sometimes there is a rebate that only applies if you finance through the manufacturer. So you do not have to reject everything blindly. But you need boundaries. Here is what you say first. Let's agree on the out-the-door price. Then you can try to beat my bank's rate, but only with one credit pull and no extra strings. That sentence matters because now they cannot start with the payment. They cannot hide fees inside the monthly number. They cannot make your bank's rate the ceiling and mark up from there. They have to show you the full deal. Out the door price, rate, term, taxes, fees, add-ons, total amount financed, total cost. That is how you compare, not payment to payment, deal to deal. Because the payment can lie. The total cost tells the truth. Now let's talk about rebates. Sometimes the dealer says, you only get this discount if you finance with us. Sometimes that is pressure. Sometimes there is actually a manufacturer rebate tied to financing through their lender. So what do? You get it in writing. You ask, is this a manufacturer rebate or a dealer discount? Does it require financing through the manufacturer? Is there a prepayment penalty? Can I refinance after the loan is opened? Do not assume. Read the contract. Because in many cases, auto loans are simple interest loans and may not have prepayment penalties. But you still verify before signing. Because if there is a real rebate, one strategy may be to take the rebate, use their loan, then refinance with your bank later if it makes sense. But only if the numbers work. Only if there is no prepayment penalty. Only if the refinance rate is better. Only if the total cost is actually lower. Do not do it because somebody on the internet said it sounds smart. Do the math. Now here is the real reason dealers hate when you bring your own bank. It is not just the interest rate. It is time. The finance office works best when you are tired. You have already been at the dealership for hours. You negotiated the car. You test drove it. You talked numbers. Maybe your kids are hungry. Maybe you are hungry. Maybe it is late. Maybe you just want the keys and want to go home. That is when they sell the back-end products. Extended warranty, gap, paint protection, tire package, theft protection, maintenance plan, all the things that sound small when rolled into the loan. It only adds $38 a month. That sentence has destroyed a lot of budgets. Because $38 a month does not sound like much. But over 6 years, with interest, it is not $38 anymore. It is hundreds or thousands added to the deal. And the reason it works is because you are no longer thinking clearly. You are thinking emotionally. You want to be done. But when your own loan is already lined up, the back-end pitch loses power. You are not rolling $4,000 of extras into a loan you already arranged. You are not letting the payment hide the real cost. You are not letting exhaustion make the decision. You already have the money side controlled. That is what makes I'm using my bank so powerful. It removes control from the finance office. But again, I need you to understand the deeper lesson. The 4 words are not magic. They are leverage. And leverage comes from preparation. Your bank pre-approval is leverage. A clean credit report is leverage. A higher credit score is leverage. Low utilization is leverage. No recent late payments is leverage. No unresolved collections is leverage. No messy charge-offs is leverage. Fewer hard inquiries is leverage. Money down is leverage. Knowing the out-the-door price is leverage. Walking away is leverage. Most people lose at the dealership because they walk in with no leverage. They walk in saying, "What can you get me approved for?" And that is the most dangerous question in the building. Because when you ask that, you give them control. You are not choosing the deal anymore. You are waiting for the deal to choose you. And if your credit is damaged, the deal that chooses you may be ugly. High interest, long term, big down payment, old car, high miles, add-ons rolled in, and a monthly payment that looks okay until month 3. That is why I tell people, do not start at the dealership. Start with the credit report, because the dealership is not where you fix bad credit. The dealership is where bad credit gets priced. And bad credit gets priced very expensively. If your bank gives you a bad rate, ask why. If your credit union says no, ask what is holding you back. If your score is low, check the report. If you have collections, review them. If you have charge-offs, check the reporting. If you have late payments, verify the dates. If you have hard inquiries, see which ones are authorized. If your credit cards are maxed out, pay them down before applying. Because every negative item on your report becomes another reason for the lender to charge you more. And the finance manager does not have to explain it emotionally. They just show you the payment. Now here is the script you use when you are ready. Before they run your credit, say I already have financing through my bank. If they say, let us see if we can beat it. You say, first, give me the out-the-door price in writing. After that, you can try to beat my rate with 1 credit pull. If they say, this discount only works if you finance with us, you say, show me in writing whether that is a manufacturer rebate or a dealer discount. If they say, this only changes your payment by a little, you say, I'm not shopping by payment, I'm comparing total cost. If they say, you need to decide today, you say, I don't make financial decisions under pressure. If they refuse to give you the out-the-door price, that tells you everything. If they will not explain the rate, that tells you everything. If they keep pushing payment instead of total cost, that tells you everything. If they say the add-ons are required, ask them to put that in writing. Because honest dealers can explain the deal clearly. Bad dealers need confusion, and your job is to remove the confusion before you sign. Now let me bring this back to credit repair. If you are watching this and thinking, Marcus, that sounds good, but my own bank will not approve me. That is the real problem. Not the dealership, not the finance manager, not the buy rate. The real problem is that your credit file is forcing you to depend on dealership financing. And when you depend on dealership financing with bad credit, you are walking into the most expensive version of the game. So before you apply again, before you let another dealer run your credit, before you add more hard inquiries, before you accept another high payment, get your credit reviewed. Because there may be things on your report that are holding you back. Collections, charge-offs, late payments, repos, hard inquiries, high balances, wrong personal information, duplicate accounts, outdated items, accounts reporting differently across Experian, TransUnion, and Equifax. If those items are inaccurate or unverifiable, they may be disputed. If your balances are too high, they need a payoff strategy. If your report is thin, you may need positive accounts. If your inquiries are stacked, you need to stop applying blindly. Because the goal is not just to get approved. The goal is to get approved with power. There is a huge difference. Bad credit asks, can you get me approved? Good credit asks, can you beat my bank? That is the whole game. One person is begging for approval. The other person is comparing offers. One person is stuck with whatever the finance office gives them. The other person makes the finance office compete. One person signs because the payment works. The other person signs because the numbers make sense. That is what better credit does. It gives you options, and options are what protect you. So the next time you go to buy a car, remember the 4 words, I'm using my bank. But before you say those 4 words, make sure your bank is actually ready to use you. Fix the credit report, lower the utilization, remove what should not be there, stop applying everywhere, build money down, get pre-approved, then walk into the dealership with leverage, because the finance office is not scary when you already control the money. Knowledge is power, preparation is protection, and credit is leverage. The more work you do before you sit in that finance chair, the less money they can take from you after you sit down.